everyone, I'm Karunya Rao and I wish all the viewers of Moneycontrol a happy Diwali. While the festive fever is in full swing, so is the earnings season. And in Ideas for Profit today, we decode the results of one of traders' favourite stocks, Tata Motors. The September quarter numbers of the automobile giant were impacted by shortage of semiconductor chips, especially Jaguar Land Rover's performance. However, the superlative performance coming from Standalone, which is the domestic business, is noteworthy, which helped partially arrest the weakness in JLR. Let's start with the key highlights of JLR's Q2 performance. Retail volumes witnessed a decline of 26% on a quarter-on-quarter basis, led by a severe shortage of semiconductors. Lower volumes led to a 22% hit on revenues on a sequential basis. EBITDA margins of JLR contracted by 170 basis points QOQ. The contraction was led primarily by negative operating leverage due to lower volumes. Domestic business, meanwhile, saw a sharp rebound in demand. Standalone performance ticked all the boxes and investor wants from a result report card. Significant recovery in demand across commercial and passenger vehicle segments helped the company post a 50% QOQ growth in the overall volumes. PV volumes grew 31% and CV segment witnessed a volume growth of 77%. Significant volume growth led the company to post a 55% QOQ growth in net revenues. In terms of profitability, margins expanded sharply by 210 basis points led by operating leverage. CV business margins expanded the most by 300 basis points, while the PV business margins expanded by 110 basis points. Though JLR is facing severe production challenges due to shortage of semiconductors, demand continues to be very robust. This is evident from its 1.25 lakh units retail order across geographies for the quarter gone by. Furthermore, with the increased pace of vaccination, the key markets of JLR, the US, the UK and China are registering strong demand. New models such as the Defender, New Evoque and Discovery Sport have been well received and are expected to boost the company's volumes. This is evident from the orders for Defender, which is close to 32,000 units. Also, the company launched a new Range Rover, the sales of which are expected to start in Q4FY22. Moreover, JLR generated a strong free cash flow of £664 million in Q2, driven by healthy profitability and prudent management of working capital. This indicates that the company has the ability to manage its operations better and will be able to generate cash once the issue of chip shortage is sorted out. The management has highlighted that near-term supply issues owing to global shortage of chips are recovering slowly and it will take time to completely go away. JLR expects a strong ramp-up in volumes in the second half. Post-COVID second wave, demand has rebounded sharply across segments. Though the domestic business was also impacted by chip shortage, the management believes that demand momentum is expected to continue on the back of strong recovery in macroeconomic activities and opening up of the economy. Also, the government's focus on infrastructure, which is driving demand recovery in sectors like cement, steel and even minerals, should also provide further boost to CV demand. Tata Motors expects the PV business to maintain momentum due to increased preference for personal mobility. The rollout of new products in PV segment will therefore continue. In fact, in the quarter gone by, the company launched subcompact SUV Punch, which is gaining strong traction. It is also important to note that PV market share continues to improve and has expanded by 130 basis points in Q2 to 11.3% compared to Q1 FY22. Currently, Tata Motors is an undisputed leader in the manufacturing and sale of EVs in India and has 3 products in its portfolio. On the back of products' performance, it has been able to capture 71% of domestic EV market share. The company had sold about 4,200 units of EVs in FY21 and has already sold close to 4,500 units in the first half of FY22. Its EV products have reached 60 cities and have 150 touch points, which is driving growth for the company. In order to succeed in the EV space, Tata Motors has proposed to create 2 subsidiaries, one of which is for traditional passenger vehicles called PV Company, where the listed entity Tata Motors will hold 100%, and the other one is for electric vehicles, an EV company where Tata Motors will hold between 85 and 89%, and the remaining 11 to 15% will be held by TPG Rise by making a commitment to invest $1 billion, of which 50% will be paid by March 22 post the setting up of the EV company. Now, the remaining will come in by Q3 of FY22. The deal valued Tata Motors EV company at $9.1 billion. And lastly, if we look at our SOTP-based valuations, the stock offers a near 30% upside potential from the current market price.